have just tuned in to Dúchascopy TV. I'm Darren McDermott. Well, we're going to take a look at emerging markets, and I'm joined by Patrizio Merciai from PARfinance. Welcome today.
Thank you.
So, Patrizio, looking at emerging markets now, give us an insight into investor sentiment and what exactly scared investors a few weeks back.
Well, there has been a scare, as you point out. I mean, and it's mostly a combination of a slowdown in growth, in world growth, not just regional growth, and a fear that liquidity, market liquidity will disappear. All the announcements by the US Fed about tapering. So, as you know, the Fed has postponed its tapering, and growth has been, creeping back. So we are now in a kind of relief, in a kind of reprieve in those markets, and have started recovering. So that's fine. At the same time, this is what happened, but I think there is something fundamental behind it. We are in a different phase, in the new phase in world growth, which will be a bit less led by China, and we probably will discuss a bit the Chinese outlook, but China is stabilizing in terms of growth, so it has an impact on commodities, it has an impact on world growth, and even though the Fed has not tapered yet, you have higher bond yields, and these probably will stay. So we have a tighter environment for emerging markets as well as for the rest of the world.
Okay, let's just have a look at the next graph. Now, the weak spell for EM manufacturing seems over. What do you think about this?
Yeah, they have been surprising. We have had positive surprises on manufacturing, industrial production in most of the developing world, and it's bound to stay. It's on a par probably with what's happening in more industrialized nations. So we are in a recovery phase, which is fine. The problem, or maybe not the problem, but there has been a downward revision in growth expectations and in earnings.
And mentioning growth expectations, here is the growth forecast revised down, a chart on this.
Yeah, exactly. And what you have is you have had a major downward revision in growth, both for this year and next. And probably now the move is done, so consensus has adjusted, so it's fine. At the same time, I think that growth looking forward will be more diverse. There will be more divergence among emerging markets, among emerging countries. So we have to be more selective in terms of our investment policy.
Okay, and can you just tell me what trends are we seeing in emerging market bonds and equities?
Okay, for equities, we have a recovery phase, but probably looking forward, there will be more divergence, probably some volatility among those markets. For bonds, maybe you can see it from the charts, in terms of valuations, in terms of spread, we are back to quite attractive valuation. The problem is that many countries in that universe have external debt problems, have current account problems. So you have there also to be selective. And as a whole, corporate bonds look better positioned than government bonds. But at the same time, the corporate bond segment in an emerging market is still very narrow, and you also had a lot of supply recently. So once again, I think it looks better, more attractive, but it calls for selectivity.
And here, another chart on EM equities and bonds have both underperformed.
Yeah, it's a busy chart. I don't know what we can make out of it. Yeah, no, but globally, equities have outperformed bonds. Mm-hmm. And it's the same in emerging markets. EM equities have outperformed bonds. But at the same time, the developed world, both for equities and bonds, has outperformed. So there has been a shift, up to last year, really all the momentum, all the action was with emerging markets. Now we have a kind of fighting back, of the developed world. And this is logical, once again, with more stable growth, with more purchasing power, more demand for higher value goods versus big spending on infrastructure and this and that. So we would expect this trend maybe to normalize, not to have so much divergence, but still I don't think that as a whole, developing or emerging markets will outperform significantly. So we have to cherry pick the markets.
And if we look at emerging market currencies, we saw a rally in Latin American currencies. And this was due to the US shutdown, and we are seeing concern rising again. Now, looking at emerging market currencies in general, do you think there is a rough ride ahead?
Yeah, and independently of any future US shutdown, because this could still happen. But I think it's really a mixed bag, As you know, there have been attacks on Turkey, on Indonesia, to some extent on India, on an Indian rupee. And we could have more of the same. I don't think there will be a huge crisis. We don't have a big change in liquidity in the overall setup for the markets, but there could be recurring concerns, especially with those countries that I've mentioned. So Indonesia, Turkey, possibly India as well, and some other currencies which will also drift down. The reason is that all those countries, all those economies are experiencing slower growth, in some cases some inflation problems, and they have big current account deficits. So with less demand, for instance, for commodities, all this it becomes a bit like squaring the circle. So I would say there could be more pressure. At the same time, I think other currencies are safe. For instance, Mexican peso, which had been correcting, has started to recover, and I think it's probably a safer bet. And Brazil, as I said, is the market consensus is for a slow drift. So I think it should not be a panic, but there could be some renewed pressure on some currencies.
Okay, and if we look at this last graph now, many emerging markets are still expensive and risky. So would you be concerned in terms of investing in emerging markets? Do you agree that they're expensive and risky?
Yeah, they are expensive compared to their own history, and they're probably a bit more risky than they used to be because of the world environment, which is a tougher, once again, world environment. So, but at the same time, I think you have good success stories and you have problems. In most cases, if you think about BRICS, for instance, I would say the best way to address that is that it should not be BRICS, but CRIBS. It should be China, Russia, and so on and so on. By this I mean that I would prefer to be in China as of today, because China is in the middle of a bold transition. It's really a policy shift in trying to move from infrastructure, capital-led growth to more diverse growth, to consumer-led growth. And it will take time and it will take bold measures, but I think they're halfway through it. So growth will probably stabilize, and we'll probably have also good announcements, better announcement from the next policy meetings, from the plenary of the Central Committee in November, for instance. So I would say it's good, and since it's the biggest country or the biggest market in the region, that's already a good thing.
Patrizio, thank you very much for coming in and sharing your views on emerging markets.
Thank you.
And thank you for watching Dukascopy TV. Now do stay tuned as we have plenty more coming up. See you soon.